Today, I wanted to talk about how we trade ETFs with high profit potential and low risk. And I'm going to show you a strategy that allows you to participate in the market sectors like the FANG stocks, which are doing great this year with very low risk. So that's an exciting strategy, a very good way to trade the FANG stocks and the tech stocks in general with very low risk. Using this particular strategy, we only risk 3 to 4% on a trade. So I'll show you that strategy, and that's been working great in the current market conditions. So today we're going to look at trading the strongest market sectors and participating in those sectors with ETFs and ETF options. We'll also look at ETF trade management. That's a very important part of our program. And as I mentioned, I'm going to show you a very low-risk ETF spread strategy that allows you to participate in the fastest-growing tech stocks with only 3 to 4% risk on the trade. And I'm also going to show you how we profit using our trade management, even if we only win on 1 out of 5 trades. I'll show you how we roll over options and we can reduce our risk to 0. At option expiration, we normally roll over if the ETF is on a buy signal, and we roll over those profits, and in many cases we can reduce our risk to 0. And I'm also going to show you how to use the optioneering calculators to calculate the profit potential before you take a ETF trade. We'll use actual trade examples to demonstrate the various strategies. I'll show you open trade results. We have $1,082,000 in open trade profits in our 2 trading accounts. And we'll look at some sectors that you can trade tomorrow, and then at the end I'll have a Q&A session. So we like to trade diversified portfolios. So we trade both stocks and ETFs, and we also trade stock and ETF options and also spread trades. So we like to diversify our trading across several different strategies. And a good way to potentially profit in any type of market is to trade sectors using ETFs. And the goal of our ETF strategy is to trade the strongest sectors with ETFs and ETF options. And using our ETF strategy, we take long positions in the strongest sectors and we take short positions in the weakest sectors. And we were heavily short during the 2001-2002 bear market and the 2008 bear market using our ETF strategies. We were heavily short the equity markets and did quite well during the last couple bear markets. So just keep that in mind. At some point, if this market turns bearish, then we profit from the downside using ETFs. So let's take a look at some examples of bear markets and bull markets over the same time period. So there's always a bull market somewhere, and there's always a bear market somewhere that we can take advantage of using ETFs. And these are just examples over different time periods. You can see the Brazil shares are in a downtrend in a bear market, and at the same time, the Internet index is in a strong bull trend. So that's an example of a bear market and a bull market over the same time period. Here's another example. The China ETF is in a bear market in this situation, and the Dow Jones Coffee total return is in a strong bull market. So we have bear markets and bull markets and there's plenty of opportunities to trade using ETF. Here's emerging Europe ETF in a downtrend, iShares Italy in an uptrend, China A shares downtrend, clean energy portfolio uptrend. So there's a lot of bullish and bearish opportunities using ETFs. And this was during the 2001-2002 bear market, and you can see the S&P was in a downtrend, but at the same time, the real estate ETF was in a strong uptrend. So even though the S&P was in a severe bear market, there's opportunities from both sides as the iShares real estate was in a strong bull market. Here's another example, the S&P in 2001, strong downtrend, and the corporate bond index in a strong uptrend. So we have lots of opportunities using ETFs. So let's look at our first strategy, and that's purchasing ETFs. And we have two simple rules for our trade selection. We select a ETF sector with a high relative strength. And then the second step is we use the Keltner channels to find a low-risk entry to purchase an ETF. And this, as I mentioned, this strategy worked well in the 2008 and 2001 bear markets. And what we did was we selected a sector with low relative strength, and then we used the Keltner channels to find a low-risk entry for a bearish trade. So it works both ways, and we're fully prepared for the next bear market to trade from the short side. So let's look at a few advantages of ETFs versus individual stocks. With ETFs, you have reduced risk and volatility compared to individual stocks. And as you know, individual stocks can be very volatile, and especially during earnings season, you can get very strong price moves either up or down. So individual stocks can be very volatile. If you trade ETFs, you can reduce that volatility and still participate in the strongest sectors. So holding a sector ETF can reduce the individual stock risk and also the volatility. And here's a few examples. Netflix was down 5%, and at the same time, the Internet index on the same day was up 1.5%. So Netflix down 5.5%. That's a component of the Internet index, but the ETF was actually up that day, even though Netflix was down 5.5%. Here's another one. LinkedIn was down 6% this day versus a 2% gain for the Internet ETF. Here's one more. Twitter was down 24% in one day, and there was actually a small gain for the social media ETF. So again, individual stock down 24%, ETF just about flat on the day, small gain on the day. So you reduce your risk and volatility when you trade ETFs. So first step in the trade selection is we select a sector with a high relative strength. And what we do, this can be done very quickly if you just go to etfscreen.com. This is a great website to find the strongest ETF sectors, and you simply select ETF here and then click RSF trends. And when you click this link here, it shows you the strongest ETF sectors, and you can see the first ETF has a relative strength of 99.3%. So what that means is this ETF is outperforming 99% of all the other ETFs. So the ETFs with the strongest relative strength will be this dark green color. And then if you go towards the bottom of the list, the dark green starts to turn to light green and white. And at the bottom of the list, of course, you have the sectors with the lowest relative strength. So you would look at these sectors for short opportunity. So in this column here, you can see this has a relative strength of 15. This one has a relative strength of 13.7 until you go all the way down to 1. So this is a great website to just quickly find out, you know, the strongest sectors, and we like to trade those sectors. So we go to this website, we find a sector with a high relative strength if we're going to take a long position, and we usually like to see the relative strength at 90% or higher so that we can trade the sectors with the highest relative strength. Then the second step is we use the Keltner channels to find a low-risk entry to purchase an ETF. And the Keltner channels help us time our entry and exit points, and they also allow us to trade ETFs with repetitive and predictive price patterns. So if we're looking at an ETF that's in a strong uptrend, the question is, where do you jump in if you want to buy that ETF? And we use the Keltner channels to help us time our entry. And the Keltner channels are an overbought, oversold indicator. There's 3 channels. There's an upper channel, which is this blue line right here, the middle channel, which is the dotted line, and the lower channel, which is this blue line here. So there's 3 channels, and they act as an overbought, oversold indicator. This chart shows the daily price movement of the healthcare ETF, and you can see when the stock is trading up near the upper channel or above the upper channel, then the stock is getting overbought. And when it trades near the middle or lower channel, the stock is getting, or the ETF is getting oversold. So we like to time our entries, and you can see this is a very repetitive price pattern in that the stock gets overbought when it's trading above the upper channel, and then it sells off, gets oversold, and then rallies, gets overbought, then sells off, gets oversold, rallies. So you can just see that this repeats itself. So what we try to do is, the number 1 rule is we don't buy when the ETF is trading above this upper channel because it's getting overbought and there's a good chance that it's going to sell off. So we don't want to buy when the ETF is trading near this upper channel. So we want to wait for a pullback when it's trading near the middle channel or the lower channel. So a very simple way to time your entries and exits. So again, we don't want to buy when the ETF is trading near this upper channel. We simply wait for it to trade near the middle or lower channel before we enter our trade. And also you can see the Keltner channels allow us to just focus on the ETFs that have these repetitive price patterns where they get overbought and then sell off and then rally and get overbought and then sell off. So we like to just focus on these ETFs with very predictive price patterns rather than ETF that has no discernible trend that's very volatile. So this is a valuable tool just to focus in on these ETFs with repetitive price patterns. So let's look at a couple ETF purchase trades that we've made, and we used the ETFscreen.com to select a sector with a high relative strength. So the first example here is, here's an example of logging on to ETFscreen.com. So When you log on, you just click ETFs in the upper left corner here, and then click RSF trends, and it will display the ETFs with the highest relative strength at the top and the lowest relative strength at the bottom. So a very simple way to get a quick picture of which ETFs have the high relative strength in the ETFs you should be focusing on for bullish positions. Let's look at a current ETF that we own. This is we own the FDN. It's symbol FDN, and it's the Internet Index or Internet ETF, and we can see it has a 98 relative strength. You can see throughout different time periods that it's been in the 97, 98, 96, 97 percentile in relative strength. So this is a ETF that we like to focus on. It's been in a strong uptrend for a while, so we selected this because of the high relative strength, currently at 98%. And here's the components for the Internet ETF, symbol FDN. It has Amazon, Facebook, Netflix, Salesforce, PayPal, Google, Twitter. So you can see these are Internet stocks, and these are the largest components of the FDN ETF. So when you buy the FDN ETF, these are the underlying stocks that you're buying. So you can see these are the stocks that have the highest earnings growth and are performing the best in the current market environment, and hence they have this ETF has a 98% relative strength. So we picked out FDN because of the relative strength, and then we waited for it to pull back, and we bought right in here. So you can see we bought on March 26th, we bought 1,100 shares of FDN at 123.76 right in here, and that allowed us to get a low-risk entry using the Keltner channels, because we waited. It was overbought here, and we waited till it traded down towards the lower Keltner channel to time our entry, and as you can see, it proceeded up after our entry. So the Keltner channels in this example allowed a low-risk entry because there wasn't much of a retracement after our purchase, and this ETF's trading around 140 right now. So we use the Keltner channels to time our entry. You can see the FDN's been a very strong price uptrend, and you want to participate. The question is, where do you jump in on that price trend? So we waited for a pullback right here, and then purchased our shares in the ETF. Here's another example. This is for the technology ETF, symbol ROM, and you can see this has a relative strength of 98.6, and it's been very strong for a long period of time. So this is the kind of ETF we like to focus on. And the top holdings for the technology ETF are Apple, Microsoft, Facebook, Google, Intel, Cisco, Visa. So these are some of the older tech names in the technology index. They have the highest rating. So you're trading the older tech stocks, and you can see that ROM was in a strong price uptrend. Of course, we hit that volatility a few months ago, and we wanted to participate, so we waited until the ROM traded near the lower channel, and then we bought 1,700 shares right in here at 96. So again, you can see the ROM went up after we purchased our shares, and the Keltner channels allowed us to get a low-risk entry. Here's one more example. This is for QLD. This is the NASDAQ 100 index. Again, in a strong price uptrend. A lot of volatility a few months ago. We waited till it was trading near the lower Keltner channel, and then we bought 1,800 shares at 76, and this one's trading around 90 right now. So these examples demonstrate how the Keltner channels allowed us to get low-risk entries as the ETFs didn't retrace much from our entry point. So when you get a lower risk entry point, that helps you from being stopped out of your position. It's real easy to download the Keltner channels. You just go to stockcharts.com, you type in the symbol of the ETF and select daily time period, click update, and it'll display the daily price chart for the ETF. And then under overlays, you just go to Keltner channels, and we use the default parameter, which is 20, 2.0, and 10. So if you want to use the Keltner channels, just go to stockcharts.com, and you can easily display the Keltner channels. And as I said, we just simply use the default parameters, and it's a great tool to help us enter our ETF purchase trades.